Today is March 14th, and this is a trade review that I've traded using my FTO account. And what I've noticed is that I need to figure out is performing a stop loss. Today, I've noticed that towards the close of the day, this is a trade that I made on Apple. So initially, what happened is the stock initially went up, had this curvature formation that clearly displayed a double top, and then started to drop. I did some trading here, which I swapped from gains and to losses. So when I looked here, I thought, okay, so the market is recovering, which means that I should be able to get in and take some profits. What I did not realize is the retracement that it was performing. And even though I'm essentially performing the challenge, which is equivalent to a demo account, what it did was, soon after I got in, the next candle turned out to be a big red candle, which means it's a reversal. So what that showed is essentially a triple top. Top one here, top two, top three, essentially a triple top. And what I should have realized is this solid line right here. This is the line where I should have said, okay, my thesis is definitely incorrect. I need to exit the trade. And then if it moves back up at a certain point, then I can think about moving forward with another trade. Because what generally happens is that when it breaks above a resistance line, it performs this. It spikes up. And what I did not see is that it broke through, but it retraced back and performed this. So the first part of it is I should not have gotten in here. I should essentially have thought about going with a put trade instead of going for a call. And then when it started to retrace, then I should have. This is actually becoming more sophisticated in my trade thinking. Whereas before, the emotions would be built up and the trading thinking and logical analysis would be hindered. But this time it seems to be that there are some logistical logic behind my thinking here. And so, first of all, this entry was immediately incorrect. I should have thought about entering once here and then wrote it up because it actually is above this particular top and moving up here, or trading from here and then putting a stop loss here, moving up, and then coming over here and looking at this situation where immediately when this red candle occurred, I should have actually exited the trade. And this would have been a stop loss situation as well. And when it started to drop, this would have been a second clue that the trade was massively moving against me. So within the time stamp of essentially the European time, which the FTMO account keeps track of, is 21:48. Approximately about 20 minutes later, the trade was exited because I'm thinking, wow, this is the point where it's going to just exit. And even though this is a demo, it felt like a real trade. Now, right after I sold, it started to bottom out and then started to climb back up. And I should have been aware of this particular situation and taken advantage of it. But by this time, it was the whole day, and the FTM account is actually green, so that is okay. I could have minimized my losses or have chosen a better entry point to enter and made the trade even better. I could have reversed my bias at this point and made it into a put trade instead of a call trade. So something to keep learning and keep track of. So these are the two things that I'm working on: the entry and the stop loss. And those are the two things that I need to critically think about on every trade when I make. And what are the things, what are the signatures that I can use in order to make this happen? Even the RSI was actually showing a reversal formation here. The volume really started to pick up here. The volume really started to pick up at this point. If I were to look at it a little more here. So the volume started to pick up as it closed. So most likely tomorrow, if I were to carry this over for tomorrow, it'll probably end up with a up day tomorrow based on the finish that occurred today.